Something strange is happening right now. The stock market just hit all-time highs. Billionaire wealth is growing faster than any period in modern history. And at the exact same time, credit card debt is at record levels. Layoffs are up over 50%. And to top it all off, the top 10% of Americans own 80% of all the stocks in this country. I've been trying to figure out how both of these things can be true at once, and what I found is honestly pretty bizarre. So let me just be straight with you and what's actually happening right now, because a lot of people are really vague about this whole scenario. In America, or westernized countries mostly, the middle class is getting completely crushed. Wages are being cut, the cost of living keeps going up, and the average American owns basically nothing in terms of assets besides maybe their house, if anything. That's it. They don't have stocks, they don't have investment portfolios, no assets under their name, and no assets that grow while they're sleeping. And then on the other side, you have the top 10% of Americans who own 80% of all the stocks in the entire market. So every time the market goes up and we're reaching levels like we've seen right now, and it's been going up, their wealth grows automatically. They wake up richer, and that's not because they worked harder or they had a better job. In most cases, yes, but it's because they own assets and their assets are doing the work for them. And in times like now, that's what really pays off. So when people say the economy is doing great because the stock market is at all-time highs, yeah, it is great for the people who own shares in these companies. For everyone else, their salary is the same. Their rent just went up, their groceries cost more and more every year, and they're being told that they just need to find a better job. But when people say that, it's pretty ironic because that new job that they're being told to look for, the other side of that is someone saying that it's going to be replaced by AI. So it seems like it's good, but things aren't working out in their favor. So the answer to all of this is you really need to understand how money actually works. And when you understand how it works, you will start to realize that you should start quickly acquiring assets. That's the whole game. Because the term, the rich keep getting richer, right now isn't some secret. It's actually happening in plain sight. Times like this, when the markets are hitting all-time highs, when interest rates are moving, when new financial things and new products are coming out and being created, this is exactly when that gap widens. And it widens because one group of people actually understand what they're doing. They're acquiring assets, they're doing all the right things, they have the best jobs, while the other people are pondering on how AI is going to replace them, and they're just in these dead-end jobs. They don't have a single clue of what's going on right now, and that affects them in the long run. So what happens when you have this much money being made at the top while everyone else is completely struggling and trying to stay afloat? You end up getting two types of people. One that is always making bad decisions, buying things that they don't need. The other one is making the right decisions, acquiring assets, and being that sole proprietor in their life. The first type is a person who is genuinely struggling. Wages aren't keeping up, rent is going up. The traditional path, go to school, get a job, work your way up, that path is slowly breaking down as time moves on. Entry-level jobs are being replaced by AI before people even get a chance to get started. The job switcher premium that everyone's used to, that is slowly fading. The raise that you would get for leaving one company and joining another one, that competitive edge to get a higher paying job, is basically gone. Because people right now are too scared to quit their original job. They can't take that risk. And even if they want to take that risk, it might not be in their best interest right now. And a lot of people think, what about the young person? What about the average young person right now? They've applied to hundreds of jobs, if not sometimes thousands. And the ones that they do get interviews for are paying the same wages that they would have made in a regular job a few years ago. They're sitting in school right now being told, stay the course. And then they open up their phone and what do? They scroll and scroll and scroll, and they see people the same age making more money in a single month than their parents make an entire year. There's just that illusion going on. And then they scroll to the next video, and that video is telling them AI is going to replace the exact same field that they're studying in right now.
You've said AI could wipe out half of all entry-level white-collar jobs and spike unemployment to 10 to 20% in the next 1 to 5 years.
Yes,
that's shocking.
That is the future we could see.
And that frustration leads to other paths, thinking that the traditional way of life isn't going to get them what they want in life. So what does this person end up doing? They start looking for another way to make it. They take on sports betting, high-risk stocks, crypto, anything that feels like it could close the gap faster than a regular salary ever will. But most of what's being sold to that person right now isn't an actual opportunity. It's a trap built specifically for someone in that headspace. Somebody on average that's more desperate to make it. And don't get it twisted. This channel is all about crypto and stocks and finance. I genuinely believe learning how these markets work is one of the most important things that you could do for yourself right now and to better your future. But there's a massive difference between learning how this stuff actually works and then on the other side, just throwing your whole portfolio into an options trade you saw somebody post on Twitter, or putting rent money on a parlay because you had a gut feeling about it. One of those is actually proven to build wealth over time. The other one just feeds that delirium and it helps the people on the other side of that trade. So learning how the game is actually played the right way puts you ahead. Going in blind and gambling because you're desperate and you just want to make some fast cash is what keeps people in that same mindset exactly where they are. If anything, it puts them back 5 years. And then we have the second type of person whose money is already compounding, building, riding that wave of this entire market explosion because their assets are at all-time highs right now, generating amazing returns. They're feeling good. The portfolio is up. Everything they touch seems to be working. And that feeling that they're experiencing right now, that euphoria, makes people sloppy and they start to make bad decisions. You see this all the time in crypto. At peak market cycles, people lose their minds and they start buying everything. They put their money in all these different projects, and then at the end of the cycle, you know what happens? They come out with nothing to show for their name because they were so happy they're putting their money in this. They don't have nothing to save for. And those are the same type of people in that boat that are chasing these high yields without fully understanding what they're buying. They see 11, 13% annual returns, even monthly, which is crazy unrealistic. And they think that sounds great without asking the question, which is basically, what is actually backing this? How is all this money coming in? Who's funding this? And they never really seem to get across with that. And right in the middle of both of these two groups, someone built a product that looks perfect for both of them. And that product is STRC. So let's talk about it because I've seen a lot of people asking if STRC is good or is it too good to be true. So let's dive into it right now. So what exactly is STRC for those of you who don't know already? The actual company name is Strategy Inc. You may have heard them as MicroStrategy, or you might have heard a thing or two about the guy behind it all, Michael Saylor. He's a prominent crypto figure. His company holds over 761,000 Bitcoin. That's the largest corporate Bitcoin treasury on earth. They created a preferred stock called STRC. It pays roughly 11.5% annually, paid monthly. And it's designed to stay near $100 a share. That yield beats junk bonds, it beats the S&P 500 dividend, it beats most fixed income products on the planet right now. So if you're that desperate person looking for a quote-unquote safe investment, because what could ever go wrong with stocks, right? Or if you're that guy who is dumping money into everything, this looks actually good. Essentially, this is the same type of stocks or investments that trap both sides of the spectrum. Take a look at Terra Luna. Everybody thought it was too good to be true, and it was. But even though it was too good to be true, it still made countless millionaires, but also crashed the entire crypto market when it went to zero. So here's actually what STRC actually does. They buy more Bitcoin. That's it. A bigger Bitcoin treasury makes STRC look safer. More people buy STRC. They take that money and buy more Bitcoin, a bigger treasury, more demand, more shares sold, more Bitcoin bought, round and round again. With this whole process, they raised $1 billion in 1 week from STRC sales alone, and immediately bought, you could have guessed it, more Bitcoin with it. Now here's where it gets a bit weird. STRC is not legally backed by Bitcoin. The Bitcoin sitting in their treasury is not pledged as collateral against anything. So if Bitcoin drops hard enough, they simply cannot keep paying those dividends. And if STRC falls below $100, the whole program stops. That whole loop will just end up freezing, and the person who bought at $100 because they saw 11.5% monthly income and thought it was safe is now sitting with something worth $88 and no clear way out. And essentially nobody told them that all of this could happen because it's not disclosed in their brochure. This whole process is called short duration high yield credit, What it actually is leveraged Bitcoin exposure dressed up as an income product. And if this isn't giving you Terra Luna vibes, you're not wrong. Luna was also built on a loop that looked genius right up until it didn't. The difference is Luna collapsed in days, but something like this, STRC, will collapse in months, and by the time it's already over, the damage has already been done. And on top of this, there's another company called Strive Inc. They saw the whole strategy that STRC was doing and copied it. And their version is called SATA. It now yields 13%, higher than STRC. These two companies are essentially leapfrogging each other, raising yields to attract the same pool of investor money. Strive claims that their Bitcoin treasury can cover dividends for 19 years at the current Bitcoin prices, which sounds great on paper, but when you remember how Bitcoin works, prices never stay at the same current price. That's kind of like the whole thing about Bitcoin. It goes up and down all the time. And now there's an ETF being filed called DGCR that would let retail investors buy into both STRC and SATA at the same time with leverage on top. So someone with no understanding of any of this can soon buy a single ticker and be fully exposed to entire loop, essentially taking on massive leverage. So essentially the people that fully don't understand what they're buying into, they just see 11, 13% yields, high yields paid monthly. These are the same people that are going to be left with the bag when it all goes crashing down like Luna. STRC and SATA are not isolated products. They exist because the environment we are in right now. The traditional path is breaking down. People are getting more and more desperate to make money. Another half of people don't know what to do with their money. And when that combination exists, someone will always build a product to catch that. And it's not just these two companies that are transitioning into all of this. There's a company called Allbirds, a shoe company, sold off all their physical assets and relaunched as an AI company because that's where the money is flowing. There are all these companies in the market right now slapping AI onto whatever because investors are funding it and people are buying it.